So, to begin with, why are insurance companies interested in climate change?
We've been looking at this for a number of years. Munich Re perhaps starting the ball rolling 30 years ago, the ABI in the UK 10 to 15 years ago. Insurance companies pay out on property damage, but they also pay out on medical claims, on all sorts of things. So climate change is, as you know, a global function, and it can affect literally anywhere in an economy. So anything that would affect the economy affects us somehow. And we've been looking at this, and we can see that storms are getting more powerful, more frequent, perhaps affecting areas we're not used to affecting, and so on and so forth. So we care because ultimately it will affect our bottom line, it will affect how we're able to offer insurance and where we're able to offer it on what terms. So we're trying to meet that risk head on. Rather than wait for it to sort of come along later. And we're trying to sort of work with customers and policymakers as part of a sort of public-private partnership in a way, getting these debates out there and trying to say how we can manage the risk together. Rather than ultimately, if the risk gets too high, it's hard to continue offering insurance on those terms, and we don't want to be in that place.
So, when I speak to people who are sceptical about climate change, they'll often tell me that we should wait until the data is more certain. Your industry doesn't take that view. Why is that?
Yeah, I think that wait and see attitude, or there'll always be a better model later, is very dangerous. We already know, and have done really for about 100 years, broadly, that carbon dioxide increases the greenhouse effect, and that's going to have knock-on impacts. So it's interesting how the estimates of the impact of climate change have not really changed massively over that period. It's just the models get more refined. If you're always waiting for a better model, you'll be waiting forever before you act. And yet we know that there's a massive inertia to the climate system, and that if you wait too long, it's like trying to turn the Titanic. You can't turn it if you wait too long. And obviously the insurance industry knows all about that incident. So I think we see already the impacts of climate change coming through. We're seeing more frequent events, larger events. Sea levels are higher. Arguably, the storm surge in Katrina, for example, is larger because of climate change. So we're already seeing the impacts. So it's coming through. We're already changing our practices in accordance with it. Waiting is a bad idea.
And your profits and business model are predicated on accurately judging risk. So what does the 95th percentile look like when it comes to global catastrophes in the next 10, 20 years?
Okay. Well, the first thing to say is to work out what a 95th percentile is, you need a model. And we've already just said that the models of tomorrow will have new and probably scarier predictions in than we currently have. So that's the first point to say, is that nobody really knows what the 95th percentile event will be in the next 20 years. We've seen an incredible last year, for example, the tornadoes in the US. Now, whether they're related to climate change, it's hard not to see all that excess power in the atmosphere leading to sort of impacts on storminess, etc., etc. So I don't know. It could be a mega series of hurricanes or something, but equally it could be a more complex global scenario with, I don't know, food shortages, water, population growth, and then maybe some natural disasters as well, all coming together to create a bad political environment. So it's hard to say, to be honest with you.
And how much of an issue is this for your company? How seriously is it taken?
It's taken very seriously. We were one of the instigators of something called the Climate-Wise Principles, which are 6 principles that the insurance industry, many in the industry, have signed up to take action on climate change. And we helped work on them. Every year we publish what we're going to do and have done to make sure that we live up to them. So we, amongst many in the insurance industry, are taking this very seriously, both in the short term and the long term.
And just finally, how is climate change going to affect the average consumer trying to purchase insurance?
I think that the very short term impacts, particularly in the UK, will actually not be that great. There's already a fair amount of variation in climate in this country, as everyone will know, and so I wouldn't expect to see an impact in the short term that was particularly great. perhaps in other parts of the world which are closer to the sea level, as it were, that are coming against hurricanes, etc., might see some impacts sooner than that. But ultimately, I think that we will see an industry that starts to recognise the benefits of adaptation, and where people have taken steps to adapt to climate change, they've recognised they're in a flood zone and they've taken steps to reduce the risk to themselves, then that will come through in a lower premium ultimately, I hope. That's what I'd like to see.
Thank you very much for joining us. It's been really interesting.